Oh, and Thomas will let me know when there's a minute left in your presentation and a minute left in the Q&A section.
Awesome.
So I will turn it over to you guys.
We got it. All right. Good afternoon, everyone. We're TV, and we're going to be pitching about Jacobs today. So starting off with our agenda for today, first we're going to do an industry and business overview, followed by our investment summary, then our financial analysis, and then final evaluation. Starting off with the industry overview, Jacobs operates in the global construction and engineering industry, which encompasses the design, development, and management of complex construction projects for both the private and public sectors. The graphic on the right of this slide shows some key growth opportunities for this industry, and all of them revolve around one common theme, and that's modernization, as a bunch of governments and private companies are really looking to upgrade their facilities and infrastructure with the most modern technological solutions available. Now going into our competitors, our main competitors we found for Jacobs were the AECOM, Tetra Tech, and Parsons, as all compete within this industry, as Jacobs, and along with this, they compete directly with contracts and from the government and private companies. Now going into the business overview, so Jacobs is currently the global leader in providing these integrated engineering solutions for a variety of end markets. Its two main business segments is first going to be infrastructure and advanced facilities, which is going to service three end markets. The first being critical infrastructure, which is going to include the design and development of roads, bridges, and energy utilities. The next one is going to be life sciences advanced manufacturing, which is going to include the design and development of pharma manufacturing facilities, regular manufacturing facilities, data centers, and semiconductor foundries. And the final end market this segment services is going to be water and environmental, which is going to include water utilities and renewable energy projects. The company's other business segment is going to be a majority-owned stake. They own PA Consulting, and this consulting business provides services and these consulting services to all these end markets throughout kind of the life cycle of these construction projects. Now moving on to this slide, I really want to go over Jacobs' strong global reach. The company currently operates in over 50 countries worldwide, which offers the company a lot of geographic diversity when it comes to its projects. Now I'll pass it on for our investment summary.
Thank you. So these are our three thesis points, the summary of which is that thesis one revolves around Jacobs' robust backlog and how it provides as the financial backbone to attack higher growth areas. Thesis two revolves around the critical infrastructure end market and Jacobs' positioning there. And the third thesis revolves around Jacobs' higher growth sectors. So first, getting into backlog, as you can see, this is the backlog for Jacobs and its three competitors. And you can see for Jacobs that it's growing over the past few years, with it being over $20 billion for the past couple of years. In addition, we have revenue by contract, and you can see how Jacobs has been de-risking their contract type from fixed cost and at-risk contracts to more cost reimbursable contracts. And what this means is that Jacobs has greater revenue and margin stability and outlook for the future, and this allows them to attack higher beta areas with more confidence because they have so much financial stability to fall back on in case these don't pan out. One example of this is the Products and Digital Technologies Suite, which you're seeing on the left-hand side. While you don't need to know what each of these specific technologies does, what is important to know is that they cover Jacobs' customers from A to Z from a digital technologies perspective. Then moving into the critical infrastructure end market. To look at this, we first should take a step back and look at the infrastructure market overall, which was valued at over $2.7 trillion as of 2024, and is expected to grow at a CAGR of over 6% through the rest of the decade. The reason we take a step back to look at infrastructure overall is because critical infrastructure is not a market that's explicitly broken out of the overall infrastructure market, and this is because there's discrepancies over what is and is not critical. For this reason, we've had to aggregate ourselves the critical infrastructure market as it pertains to our company, Jacobs. And that is getting data from the three sub-verticals that Jacobs mentions, which is transportation, energy, and cities and places. And that's what you see in the top right-hand corner, top left-hand corner. Now, moving on to why management believes in growth in these three sub-verticals. First of all, in energy and power, we've seen strong historical sector growth. But in addition to this, energy and power is cross-market relevant, which means it's used in a variety of industries, obviously. And that means that as these industries grow, so does the demand for energy and power, and so does contract revenue for Jacobs. Second, we have transportation, which is the largest sub-vertical for Jacobs within critical infrastructure. And transportation is inflecting through digital enablement. That being that transportation is being managed more by software and AI tools. What this does is it increases the overall volume of transportation, which helps Jacobs as they will have more physical infrastructure projects moving forward. And additionally, it means that customers will be coming to them for the digital solutions and technologies that we've mentioned previously. Lastly, we have cities and places. which is being driven by two major things. Obviously, population growth, but also, more importantly, we have the increased need for modernization, as a lot of the infrastructure in cities and places is outdated, and we'll touch more on this later. But for now, let's look at why Jacobs has such a strong portfolio and expertise in critical infrastructure. So you can see on the bottom right-hand corner that Jacobs has a lot of reputation, and these are some of the sub-end markets where they have the best reputation. But what you should know is that they're essentially ranked in the top 3 for all of the sub-verticals in critical infrastructure. And this, paired with their key projects, which you see here, at $8 billion, $10 billion, and $11 billion, these are all recent projects, just signals how Jacobs' clients are so confident in them for these large-scale projects and trust that they won't make small mistakes that could reverberate and cost extra billions of dollars for these clients. Now, why are they so dominant in these sub-verticals? Well, because in energy and power, they have unmatched programs positioning, the fact that in transportation, they're a leader in complex program delivery, and that in cities and places, they manage some of the largest scale events in the world, such as the Vied Expo and the Olympics. With that, I'd like to pass it on for our third thesis point.
So I'll start by talking about their life science business. So obviously Jacobs isn't creating new chemical formulas for new treatments, but they play a crucial role in designing these manufacturing plants that pharmaceutical companies rely on, and they're very complex. Jacobs has done a great job setting themselves up to take advantage of some of the major growth prospects the industry offers. For example, Jacobs designs the GLP-1 manufacturing plants used by Eli Lilly and Novo Nordisk, which are your weight loss drugs and diabetes treatments. We also see Jacobs being a major beneficiary of recent investment into antibody drug conjugates and other breakthroughs in biotechnologies. Now, with over 70 years of experience in the industry, Jacobs has built a very strong client base, and because they provide such niche expertise that isn't met by any major large competitors, they're able to command very strong pricing power. And lastly, they're able to create recurring revenue streams as these major players will come back to Jacobs and look to innovate these manufacturing plants. And now I'll move on to the water end market. A few years ago, when Biden passed the infrastructure bill, billions and billions of dollars was allocated to addressing outdated water infrastructure in the United States, and quite frankly, around the globe, there is such a need to address water infrastructure. And that presents some major opportunities for Jacobs. One, applying digital technologies with their suite of software. 2, modernize these water facilities. Number 2, cross-selling expertise in the water end market. So a recent project of theirs, they used an ocean to cool a data center. And that goes along with my third point of sustainability and using sustainability to drive modern solutions. And then 4th, addressing harmful contaminants like PFAS, which persist in water streams and have very adverse health effects on humans. We'll now pass it off to financial analysis.
Thank you. Jacobs' gross profit margin has seen significant expansion over the past several years due to their focus on their higher margin segments, including their life sciences and advanced manufacturing and water and environmental segments. Their return on assets has also seen some growth due to this focus on the aforementioned higher margin segments, coupled with their reduction of assets on their balance sheet through their critical mission solutions spin-off. Their day sales outstanding is low, signaling their ability to effectively collect payments from their customers, in turn, increasing the cash flow and decreasing the risk for the company. And the equity multiplier is also low, which allows the company to take on more leverage if needed to expand operations. Now, moving on to investment risks. They are prone to cyclicality risks as they operate closely with companies in the pharmaceutical and technology spaces, which are more prone to volatility during times of economic fluctuation. A reduction in returns for companies in these segments can lead to a reduction in infrastructure spend. Since they operate in over 50 countries globally, they are also prone to geographic risk, specifically with more concentrated risks in countries along with local changes in regulatory and environmental laws. Finally, moving on to government initiatives, since the Trump administration has taken office, there has been a change in rhetoric surrounding environmental and sustainability practices, which could further have an impact on future spending in these segments. I'll now pass it off to discuss valuation.
Thank you. So currently Jacobs Solutions is trading around $111, and we use 2 different discounted cash flow approaches to derive our terminal values. And the first being our perpetuity growth model, and the second being our EV to exit multiple model. And between our 2 intrinsic values, We decided to use a weighted average to derive out a blended price target of $147. And this insinuates about 32% potential upside from the current share price. And as well, we developed a bear and bull case scenario by adjusting key assumptions such as revenue growth, margins, and terminal values. And as you can see from the screen, this really just creates this well-defined valuation range under varying operating conditions. So as well, to test the strength of our assumptions, we developed a detailed sensitivity analysis. And as you can see from both models, our 7.77% weighted average cost of capital was used for our discount rate. And starting with our perpetuity growth model, you can see that our long-term growth rate is 2.2%, which is right in line with U.S. real GDP long-term growth. And in our EBITDA model, we used a 14.47 times multiple as our base multiple, which was taken with an average of industry peers. And across both these models, you can see that Jacob Solutions is fairly valuable, significantly undervalued, even in more conservative assumptions. And this really just goes to show the robustness of our analysis, and as well confirms more meaningful upside in more favorable scenarios. So as well, we developed a relative valuation for Jacob Solutions compared to 3 of their industry peers. So looking at price earnings multiple and EBITDA multiples over the past 5 years, we can see that Jacob Solutions has both been trading at a discount while maintaining stable operating performance. We really see this as an opportunity for multiple expansion and price appreciation while maintaining dominance in the sector for the coming years. So, over the past 5 years, Jacob Solutions has really, been a leader in the industry. But yeah, from the analyses that we've conducted and the information that we've, conveyed to you guys today, we conclude that Jacob Solutions is undervalued, and we recommend to buy with a blended price target of $147. Thank you guys, and we will now open up for any questions.
How much of their business is U.S. versus non-U.S.?
So for the most part, about 40% of the revenue comes from the U.S. and from the U.S. government directly, it's going to be about 10%, and then a lot of that's going to come from more like state, and then the rest of that's going to come from like the private sector and state businesses.
So 60% is non-U.S.
It's the last. Yeah, 60% domestic.
Wait, 60% what?
Domestic.
40% non-U.S.
Build an income statement?
You mean like for our valuation?
Yeah.
Yeah.
And you project out.
Yeah, you want to go to our assumptions?
And you don't have to show, tell me how they make money. I'm assuming it's a headcount model, right? How did you, walk me through how dollar revenue is on the balance sheet.
Yeah. So I'll touch on it. So essentially they contract with different clients and they provide like a host of different engineering services. It's kind of like a mix of a prime contractor and a consulting company. So they basically lead companies through the development process. And like I said, a lot of their contracts are cost reimbursable. So they essentially make a margin on top of the costs that they incur over the course of the project. And so that obviously shows up in their COGS, and the additional money that they make in excess of the cost is what they.
So is this billing people in their time?
Yeah, it's essentially the workforce is engineers, and they work basically on their time.
And so are you forecasting out that their employee base is going to grow by a certain amount? Or, walk me through if they're going to grow indefinitely and they're going to expand into the markets, what did you use to project out your revenues?
I think we used kind of the growth rates for each of the separate end markets. So the critical infrastructure end market for that, their first largest segment is going to be relatively low. It's going to be around 3 to 4%, whereas the water and environmental end market is seeing a lot higher growth rate, around 9 to 8% over the next few years. And because a lot of these systems are outdated, because a lot of the kind of data infrastructures in the U.S. specifically is graded between a D and C+. So a lot of kind of states are really spending a ton of money trying to upgrade this. And then along with this, the other segment, which is the life sciences advanced manufacturing, as Colin touched on, life sciences, there's a ton of new drugs that are going to be released on the market in the next few years. And along with this, they need those manufacturing facilities. And along with that, there's data centers that everyone's been investing into. And actually recently in Australia, they partnered with vied Quantum in the first commercial-based quantum computing data center, which they expect to start building in the next couple of years.
It's important to note that the revenue and margin, basically the aggregate of those, are right in line with the bottom end of management expectations for the coming years.
How does net income compare with cash flow? You know, is it higher or lower? Or
Yeah, I can take that. So I believe about 60% of free cash flow is given back to shareholders, and as well, over 100% of net income flows into free cash flow.
So are they just consulting and designing these projects, or are they building these projects?
They're focused more on designing, and then they find subcontractors, so that would be part of their program management.
And do they get a cut on that?
Yeah, it's all like, it's essentially mostly cost reimbursable, so whatever they incur, they report to their client, and then they make the margin on that.
Okay. So they consult with the client?
Yeah.
And then recommend that that client hires the firm that they recommend, which they also get a kickback on?
Oh, no, they don't make money from the construction company.
Okay.
Yeah, they make money just from the client side.
Okay.
is it percentage of completion, recognition of
That's what I
revenue?
was going to ask you.
Okay. Is it, you know what percentage, is it percentage of completion, revenue recognition, or not? Yes, I don't know.
How do they book their revenues? Yeah. Do they do it upfront? Do they do it as the project is evolves and gets developed, or do they do it on the back end?
I believe it's billed over the course of the project. Since they're involved in so many different stages of the the project life cycle, they bill like as the stages are completed. Sorry, what was the other part of your question?
No, that was basically
Okay.
there.
That's time.